Hi, everyone. We are really excited to be sharing some updates with you about how the MO2 portfolio is going. So if you're a new investor to Suncrest, one of the things you can expect is lots of communication and transparency from us. One thing we like to do is every year we like to do a quick year-end review of how we're performing for the previous year. Since we just closed in October, our first performance month was November. We're just going to go ahead and look at the last 4 months of actual performance and talk about how things are going and what we're seeing. I'm going to go ahead and skip through this agenda. This is really so that when we share it, you can follow through with the PDF version. Some of the folks you'll be hearing from is obviously myself, Ryan. We also have Kristen that's going to be presenting. She is our project director that's been with us from the beginning, even from before the beginning, has been with us for 3 or 4 years now. And over the last year has taken on a new role where she's overseeing all of our projects and assets. And it has been amazing to see her step into this role. She's done a really great job. Trip has been with us almost a year now. He's been our amazing financial analyst, does all of the data crunching and helps us out with distributions and accounting, all the many things you'd expect. So he helped us with lots of the numbers in here. We also have Ali on our team is on. She's been with us about a year and a half now, and she wears many hats. One of those is investor relations. So you'll be hearing from her if you have any questions or need help with distributions. She's going to be here to help out with all those kinds of things as well. So as a reminder, this portfolio is in the Springfield, Missouri area. We have 6 properties, and 4 of those are in Springfield itself, and then Ivy Acres and Ivy Acres and Oakwood. Those first 2 are in Lebanon, which is just outside of Springfield, but a very strong market as well. So as I mentioned before, we're going to do a 4-month financial review. I am really excited to share that everything that we are seeing is above or at expectation, which is really great to see. So we had expected for our first 4 months and what we did, by the way, we took the first 4 months of our budget and first 4 months of our actuals and we annualized them. So you could see what we would see for the whole year had we been performing for 12 months. So based on that, our budget was 1.7 for the whole year, and we're trending toward 1.9, which is amazing. We'll be talking a little bit about why in a bit. Our total operating expenses, we are seeing a little bit higher operating expenses as well, but the net operating income is higher as well. So overall, we're really excited to see this extra cash flow that we're seeing and extra income. The main thing that we're going to be talking about on why is because we were super fast on our sub-metering. So we did say that over the emails, and maybe some of you got annoyed because we kept talking about how fast we were being with those sub-meters, but it's huge. We were able to get those installed within about 60 days at 3 of the parks, and we had budgeted 6 months for that to happen. On top of that, we only forecasted recapturing 50% of our utilities, and we're at above 80% recapture already. So some of those things are really helping out with this. So we see better net operating income. We add in our LTO income. That's right at budget, right at forecast. Obviously, debt service is right at forecast. And then our overall net before tax cash flow is higher than what we had expected. So this is great because our plan has been from the beginning to start 6% distributions in April. And I'm pleased to say that will be happening. We'll talk a little bit more about that in a couple slides. Each of you should have already received your final K1 for 2022, and we're thrilled to share that we were able to get 155% bonus depreciation. We only projected to get 80%. So seeing higher than that is always amazing. This is something that if you don't have a lot of other passive income, you can carry this forward year to year and continue to offset any other gains you receive from this asset as well as other assets you might have that you're a passive investor for. So beginning distributions, again, our expectation was in April of this year, we would start at 6%. Obviously, the whole preferred return is 9%. So that difference will just continue to accumulate. So we'll be paying 6% now. We'll grow every year another 1% is our forecast. So 7% next year, 8%, and then 9% within 3 to 4 years. We're hoping to beat that, but that is our expectation. That's our budget right now. So what we wanted to point out is this is our actual net operating income month over month since we closed. And then you take into debt service, add in other operating expenses and home income, things like that. And you can see that gray line is our net cash flow, and the blue line is where we need to be at to be able to distribute 6% returns. So we're right there. And we actually have several other levers that we're going to be flipping here to increase the cash flow even more, including better water recapture, better utility recapture, home sales, some rent increases, all those things. So we will definitely be able to beat that 6%, and we're on target.
Our collections have remained strong since we purchased this portfolio. So our managers have done a great job of ensuring that people that are late are communicated with frequently. If people are falling on hard times, we're working with them on a payment plan of some type. And we've had to begin very few evictions, thankfully, because of this and the relationships that they've made with the residents towards collections. As we talked about at the very, very beginning, we've known that there was a huge water issue at Cedar Brook, one of the communities in Springfield. So the graph showing how many gallons we were billed for, and to note that the rate that we're billed for is at a bulk discount rate, commercial rate. And what we are billing back to residents is the residential rate, which is a higher rate. So that helps close the gap a bit. You can see since we sub-metered, resident use has gone down, but we've also been diligent with being proactive in identifying the bigger water leaks. This is galvanized pipe that's 50 plus years old. There's going to be leaks probably all over, but some of the bigger ones we've identified and corrected. We're in process of getting engineering plans and bids to replace the water infrastructure so we can really close that gap up. That's going to be a major emphasis for us going forward. Uh, 4 months, we've been pretty active with our homes. So we've purchased and delivered 4 quality used homes. We've sold 2 homes that were vacant. And then we've also purchased 8 additional homes. 7 of those are brand new. 1 is another used home that hasn't been delivered just yet, but will be in Q2. And then along with, obviously the collections have remained at a very high rate. Kristen?
Overall, the past few months have seen a lot of change in all of our MO2 portfolio communities as we work to improve services and living conditions in these communities. We have installed sub-meters, as Ryan has mentioned, at Cedar Brook, Chestnut Gardens, and Lazy Acres 3 months ahead of schedule. That allows us to bill back residents for their water and sewer based on their actual usage. In Lazy Acres, we have trimmed the trees there, protecting our electrical lines and adding to the beauty of the community. We are currently working with city utilities to upgrade electric infrastructure to direct billing to our residents and reducing ongoing maintenance costs at maintaining a private electrical infrastructure. We have also resolved some of the water and sewer issues in this community. In Cedar Brook, Chestnut Gardens, and Oakwood Estates, we have addressed water leaks to improve NOI through more work, though more work needs to be done. During this process, we were able to address sewer issues in these communities for the health and safety of our residents. We have had some challenges while addressing some of these things in the MO2 communities. In Cedar Brook, there were some water infrastructure issues. There have been multiple issues with water line breaks and degraded original galvanized water lines in this community. With recent repairs, we have saved around 600,000 gallons of water per month. We are in the process of gathering estimates for the entire water infrastructure replacement, which could be around $600,000. Cedar Brook sewer infrastructure. The sewer infrastructure is severely degraded in this community with lots of clay tile, and tree roots have grown into many of the lines. We have installed additional cleanouts throughout the community and have repaired several issues. Moving forward, we are replacing the lines on demand instead of the entire system replacement. Winter Storm Elliott. The entire Midwest experienced an unusual winter storm that wreaked havoc on the infrastructure in the MO2 portfolio. We have received an insurance settlement to pay for the majority of these repairs caused by the storm.
A unique challenge that we've encountered in Lebanon at our Oakwood property that we were aiming to submeter is an antiquated city ordinance that was put in place back in the 80s that does not allow submetering. So they've agreed to allow us to present to the city in April, and we're partnering with Metron. That's our water submeter provider, who will also they'll co-present with us, showing the value of submetering to the community, helping reduce water use, and showing that we can be a great landlord with correctly submetering. State law allows it, but their city ordinance does not. So we're pushing to get the ability for those submeters to be installed. In our market rent comparison, the portfolio rents are listed over on the left, ranging from the mid 200s to mid 300s. The average portfolio is a $295 lot rent. We've taken a sampling of many of the communities in Springfield, right next door to us, to just a few miles away. So as you can see, we still have room to grow into that market rent. We'll be doing that over time so we don't stress the tenants too much, but we will be closing that gap over the next few years.
One thing also to note is our occupancy is really high across all 6 of these. Most of them are already at 100%, with IV being the only one that we need to increase occupancy at. So when we see high occupancy and we're below average rent, we really have a lot of opportunity to increase here.
Thanks, Brett. And on the home update side of things, in the 4 months that we've owned the portfolio, we've brought in 4 quality used homes. Those have been delivered and set and sold. And currently we have just a handful of vacant homes that are being rehabbed, and 3 of those are already under contract even before the rehabs have completed. As Brett was alluding to, we are working to infill up in Lebanon at Ivy Acres. We purchased 7 new homes for Ivy Acres. We will be breaking ground on the piers and infrastructure to have those installed here shortly in Q2. Always thank you for your support and trust. And if you need to reach out to us with any questions or would like to comment on anything that we're doing, investors at suncrestcap.com goes to Brett, myself, and Allie. And then if you'd like to schedule some time with Brett individually to talk over the investment, he can email you his calendar link, and you can have some time to have any questions you have answered.
Thanks, Ryan. And my Calendly will actually be in my signature line for the email that we send out in this video. So check that out. Thank you all again. Really, really appreciate your support and partnership. We're excited to continue making this a great investment for all of us. Have a great rest of your day.